If I told you that $10,000 invested in the S&P 500 in 2000 would be worth over $43,000 today, would you believe me? Most people think the stock market is gambling. Today, I'm going to show you why it's actually one of the most predictable wealth-building tools on the planet. In the next few minutes, you'll understand exactly what stocks are, how to actually make money from them, and the one golden rule that separates investors from gamblers. No fluff, just facts. Let's dive in. First, what even is a stock? Simple. When you buy a stock, you're buying a tiny piece of ownership in a real company. Think of it this way. Apple has about 15.5 billion shares. If you buy one share, you literally own a fraction of every iPhone, MacBook, and Apple store on Earth. You're not just betting on numbers going up, you're becoming a business owner. And here's the key. When that company makes profit, you make profit. There are two ways this happens. How you make money? Way number one, capital appreciation. Fancy term, simple concept. You buy low, sell high. If you bought Amazon stock in 2010 for $100, it would be worth over $3,000 today. That's a 3,000% return. Way number two, dividends. Some companies share their profits directly with shareholders. For example, Coca-Cola pays out dividends every quarter. If you own $10,000 worth of Coca-Cola stock, you'd receive around $300 per year just for holding it. That's passive income. But here's what most people get wrong. The stock market isn't about timing, it's about time. Let me prove it with real data. Since 1928, the S&P 500 has returned an average of 10% per year. But here's the catch. If you invested for just 1 year, you could lose 40%, like in 2008. But if you invested for 20 years, there has never been a 20-year period where you lost money. 0 times in history. This is why Warren Buffett, worth over $100 billion, says, "Our favorite holding period is forever." The biggest mistake, trying to predict short-term movements. The smartest move, consistent investing over decades. That $10,000 I mentioned earlier, that wasn't from perfect timing. That was from simply staying invested through 2008's crash, 2020's pandemic, everything. So here's what you do right now. Start with index funds. These are baskets of stocks that track the entire market, like the S&P 500. You're not picking individual winners, you're buying the entire game. Invest consistently, even if it's $50 a month. A 22-year-old investing $200 monthly until age 65 at 10% returns, that's $1.4 million. Same person waiting until 32 to start, only $600,000. Time is your biggest advantage, and never invest money you need in the next 5 years. Short term, use savings accounts. Long term wealth, that's where stocks dominate. Remember, stocks aren't lottery tickets. They're ownership in real profit-generating businesses. The market rewards patience, punishes panic, and has created more millionaires than any other asset class in history. If you want more deep dives on building wealth, subscribe now. Drop a comment telling me what's your biggest question about investing. See you in the next one.